Good morning, everyone, and welcome to the Quantum Leap pre-market trade plan setup for Friday, August 7, 2015. My name is Doug McKay. I am the founder of Quantum Leap. Quantum Leap is a group of private retail traders. We've been around for about 6 years. It is a subscription room with a live trade room. Each morning we come together and take a look at the structure of the market, take a look at the trade levels that we're looking at for the day, the targets, and our hypotheses for the day. If you want more information or want to get involved or come in for a free trial, please contact me at quantumleaptrading@gmail.com or give me a call on my cell, 647-545-8065. Love to talk about the market. You'll never find me lacking to want to discuss it with somebody. Before we get going, I have to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan and your own risk metrics. Okay, so let's take a look at our trades, our setup for yesterday. Yesterday we were looking at this 96.25 area. Our key target below was here at 91.50. We tried to peak above the 96.50, and the first target above was the overnight high at 99.25. We got as high as 98, rejected the overnight high, did not take it out, rotated back down, hit our main target at 91.50, continued down to the overnight low, which was just below it, and that key line, our key line in the sand we talked about. My whole hypothesis yesterday was a neutral day, because we had a neutral extreme the prior day, so I was looking for a rotational day with an upside bias if we held below, above 89.50. If we got below 89.50, which was our key line in the sand, then we were looking for a rotational day with a downside bias to go down and test that 79.25 level. And if we broke 79.25 level down to that 75.50 and 71 CHVNs, that triple distribution zone between 75.50, 71, and 66. We got down right to our next trade area, which was down at 2070. Buyers stepped in and they rotated us back up in around that 75 area, the 75.50 CHVN, and then we just chopped around there between 79 and 74, and ended up getting a VPOC shift down to 77, and we closed at 79. So we had a fairly decent day yesterday. We ended up with 20 points. Went back to trading mostly two lots, lightened it up at the end of the day to single lots just to keep it tight, but not a bad day. Okay, let's get the news out of the way. I don't know why my throat keeps going like this. We had Canadian building permits. Oh, that still hasn't, that had to come up by now. Wow, look at that. Big jump in what was expected in terms of building permits from 5.1 to 4.8. We had the Canadian unemployment. We had unemployment rate. We had the average hourly earnings, and then the the non-farm employment. And you can see non-farm employment came in less than anticipated, 222 expected, 215, and then the unemployment rate came in pretty much equal. So we had a big dip on the news and went down, put a new overnight low in down at 71.25, rejected that, and now they've rotated back up through and testing this 79 area again right now. We have Canadian IV PMI at 10 o'clock, but really no more scheduled news, we'll have to keep an eye out for headline news, but I doubt we're going to get any real big news. So I like to start my morning, with a basic routine of going through and taking a look at the trends in the different time frames. I use a simple candlestick chart with a 9 EMA and a 20 SMA. I'm looking for slope and separation. I'm looking for crosses, and I'm looking where the trends are violated. So on the monthly, we are holding the 9 EMA. We've got good slope. We've got good separation. The trend is very much intact on the monthly. On the weekly, we've got this potential head and shoulder pattern. We're in consolidation mode up here. No clear trend on the weekly. On the daily, we do have some weakness coming in. We've broken below the 9 and the 20. We've got a possible start of a downward trend. Right now, we've got a little bit of a tech gap. That tech gap would be filled at 87. I'm actually looking at 87.50. That's the CHVN. 88 is the microcomposite VPOC from July 1st till now. There's a couple other things in that area that we'll take a look at on the composite chart when we get there. But possible start of a downward trend, a little bit of weakness, but more consolidation rather than a trend. Going to the intraday to see if there's any trends coming into the RTH trading session. You can see that we are trending down right now on the 4 hour. We have a naked cross still above at 20.90 and a quarter. And but we do have some slope and separation. We have a little bit of a tech gap here. 82.75 would close that tech gap likely. Going to the 30-minute. 30-minute, we had a pretty strong move down yesterday. Then we've basically been in consolidation. We were starting to get a bit of a downward trend here, but this spike lower and then buyers coming in at that 20.71 and a quarter, ripping us back up, and now we're trading above the 9 and the 20. So NFP was pretty decent, and looks like we're going to get some continuation higher on the 30-minute. You're going to see this very clear on the 5-minute. Look at that spike up. Now we've got a naked cross that happened at 20.76 on the 5-minute. So we could come back down there and test that to close this naked cross. We've got a bit of a tech gap going on. This is pretty strong parabolic move here, and likely to come back to test some of these lower levels. The one that I'd be watching is the 77 and 79 area. Okay, so let's take a look at where we are. I've already posted the numbers in the room. It's hard doing the numbers on an NFP day simply because of the fact that we've got that big oscillation. So I tried to get them out and posted by 8:30. I basically got them posted at 8:30. Okay, so taking a look at the big picture, we are smack dab in the middle of balance in the long-term value area that runs from the February 5th and to now. We are smack dab, in the value area of the July 1st till now value area. And we are, let me just bring this to the front. We are below the current 7-day value area. And what I should do now, I'm going to do right now, is I'm going to bring these days into balance just to see where everything. So right now, if we go back to this where we fell out of balance up here and coming back into value from the 22nd of July through to now, our value area low is 82. So even bringing in these days here, it doesn't put us, it puts us right testing the value area low. If we get back inside, more specifically above this 82.75, I'd be looking for a rotation back up into this 88. 87.50 is a CHVN. 88 is the microcomposite VPOC from July till now. Now remember that the longer term value had shifted up to 93.75, and if we come back up into this 88, I'll be watching to see if this microcomposite VPOC from the beginning of February shifts down here again. This is an area of undetermined value between the which is now what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days of balance. Microcomposite VPOC is up here at 97.75. So clearly value is above us right now, and we've fallen out of value. So the key line for me this today is going to be this 82.75. If we get above the 82.75, we're back into the shorter time frame value area and back into this distribution where we've got, you know, all this value at 88, 93.75, and 97.50. So I'd be looking for a rotation up into there. If we cannot get above 82.75, then I look for them to come back down and see if they can find some more buyers down here in this triple distribution. And this time I would probably expect them to come down to the 62.25 and test the lower, longer term value area low at this 20.60.25 with 59. 59 is going to be our key line for us to the low side. Anything below that, looking for a bigger move down, with the main target being 50.50, but the longer term target and the bigger target is going to be down here at this 20.11.25. 20.11.25 is the microcomposite VPOC from the value area that we broke out of and started this distribution zone up here, this value area here. So below the 49.50, we get into this value area with the most traded price for that distribution zone down here at 20.11.50. So if we can't get back into up here, we're going to test the lower end side of this value and this triple distribution, 75.50, 71, 66.75, and then the 62.25. And this is a pretty blunt area that is not properly auctioned and needs to be come back and visited and re-auctioned down here. And we've been coming down a couple times into this area and testing it. But if we can't get back inside above that 82.75, I think we're going to spend some more time chopping around in this area and probably come down a little bit lower. They've been down to the 70 area a couple times, again overnight. But right now it looks like they want to take this higher and get back inside of value. We'll have to wait to see the RTH open. The ATR, the 20-day ATR is running at 20.60 still, off of the bottom at 21.71.25. The ATR target to the upside is 20.91.75. And then the ATR target to the downside is 20.61.90. Well, that puts us right here at the 62 area for our ATR target to the low side, and puts us right here testing that 89.91. Remember that 91 area where we bounced off of on Wednesday is right there. The 2 days we found value coming down there. So let's take a look at the overnight and start moving our numbers over. You can see we're coming back down here. Our overnight low is down at 71.25. Our overnight high is at 82.75. See how it follows that 82.75 CLVN, rejected it. And our overnight VPOC is 77.25, just above yesterday's RTH VPOC. So definitely, you know, we had a pretty tight range in this lower distribution overnight, and they failed to break below it or break above it so far So we're really finding some balance. Got a little bit of an LVN right here at 78 1/4, just below our close. Our close was 79.50. This is going to be tough to trade in here. So I think you need to be very careful. Yesterday's VWAP is sitting here at 80. We're trading 79.75. I would be using this 80 level, 80.50, as a trade for a breakout to take out the overnight high and test that CLVN at 82.75. You've got a LVN from yesterday at 83 with the value area high at 83.50. So I would be using this as a trade area. Take the trade area of the 80, a break above 80.50. I'm going to just make sure that it encompasses 80.50. Should give you a move to take out the overnight high. There's the CHVN at 81 1/4. So I'd be looking to fund a trade above 80.50 at 81 1/4 and look for continuation to come up, take out the overnight high, and test the value area high. Above the value area high, 83.50, I'd be looking for them. Let me just get rid of this. I don't need that. Take this out here. I'd be looking for a move up to and I would really wait for a breakout trade to get above the midpoint from yesterday. So really, you got to go from 83 up to the 84. Don't short unless we're below 83. Don't get long or add on to a long unless we're above 84. And then your first target up there is going to be the 86 1/4. But the main target above is going to be this 88. Back into balance. All right, bring that to the front. And then above that, just above that, you've got this 89.50. Now, we were using that 89.50 yesterday. We're going to use it again. Because if we get above the 89.50, then I think you're going to come up and test this next level. Okay, and this is the start of a zipper line here. I'm going to use the 91 1/4. So 91 1/4, above 91 1/4, we got the zipper here with nothing really, okay, to hold us down, no real resistance until we get up to the open up here from yesterday at 96.75. And then above that, of course, we've got the 98. Don't forget that the most traded price going back to February is 93.75. So if we get above this 91 1/4, we've got the zipper to 96.75, but I'd be targeting the 93.75 here. As your main target in the zipper line, but I think we'll come up, okay, and you're not going to get any resistance until we get there, and then we probably even blow through it and go up to that 96.75. Above 98, you've got the centennial number at 2100. Oh. And then 2103.75. Well, there's 2101.75 and then 2103.75. And with the key line in the sand now on the microcomposite VPOC longer term is 7.25, and then at 08 you've got the 12-day balance value area high. So I'm going to use 2108 again. And then above that, you've got the big target up here at the 11.25 and 12.75. I'm using 12.75. This is no longer a measured move. That was the ATR target to the upside yesterday. So I'm using 12.25 just in front of the 12.75. Then the naked close at 21.14.75, 21.15.50 CHVN, and 19.50s. And this should be 20.25. And actually, it's already there. Sorry, 20.25. And then above that, you've got the 24.50. That's no longer a real threat. It was the RTH all-time high. That's been shifted to the 21.26. And then we've got these measured moves and everything up there. We're not going to get anywhere close to there today, so I'm not really worried about that. To the downside, below the 80.25 level, our main target, of course, is the balance that we're in at 77 and 77.25. We do have the naked close, so they're likely going to open up, try to come up here and test this 80.25, taking out the close at 79.50, and then see if we find responsive sellers stepping in and coming back into balance. If we stay in this area in the next 15 minutes. Depends if we're above or below this VPOC. If they don't find responsive sellers, then look for them to pop it into 82.75, take out the overnight high, and test this value area high and midpoint and IB from yesterday. But there's nothing really in here to lean against. So it's really tough to take a trade right here. The big target below us, below the 77, the next target below is going to be the 75.50. But there's really nothing down. You got 75.50. You've got the overnight low at 71.25. There's really nothing to lean against down here. Okay, until we get to the 70 level. And that's going to be my other trade level. So you really got a 10-point range that is got nothing real solid to lean against. So you got to be very careful in this area, because where do you put your stop if you get short? It's got to be above 80.25. Where do you put your stop if you're going to get long in here? It's got to be below 70. That's why I said it's going to be tough to trade this area until we have something definitive to lean against. Below 70, main target below range and value is a 66.75. And then below that, we've got the 62.25. And then our key line in the sand is still going to be, it's 60.25, but you've got the CLVN just below, so I'm going to be using 59. It's going to be the same thing whenever you get a situation like that. Can't get long until you're above 60.25. Can't get short until you're below 59. And then below 59, we've got this 57.50. the VPOC from this balance zone right here that runs from the, can't see the number there, runs from the 29th through to the 10th of July. And the VPOC there is 57.50. That's your first fund below, or scale, whatever you want to call it, fund scale. Okay, and then below the 57.50, you've got a 53.50. But really, right here, you've got the 55. Anybody remember what the 55 is? That's right. It is your year open. Oop. So if your year open, and then our last month open was 54.75. So you got, the year open and last month's open, and this is a key level. If we get below that, then I think the bears are going to get aggressive. And we've got the 51, which was our July FOMC number, and then 49, 45.50, 40. We've been through these. 30. This should be 37.50, and then 34.25. That's not labeled right. 30. 26.75, 24.75, and then this is no longer a measured move, by the way. It's a 20.11.25 I'm targeting. And again, I don't think we're going to get down here. Oh, there, it's already down there. Okay, so I don't think we're going to get down there today. I'm just, label them so that they're there. So again, be careful on the open. I would wait to see if they reject the 80.25 and get short into the 77, or they break above and take out the overnight high and test the upper value area. I'll be looking for responsive sellers here as well. And if they do step in, they can look for a rotation back through value and down to the 2070 area. If they're just in here and it's two-sided trading, look for them to probably, if they reject the 80.25, I think that, or 80.50, I think you'll see, this overnight low taking out at 71.25 and a test of the value area low. This is going to be a key area to define whether we pop and drop, or pop and rotate up through and repair, or we reject, leave the overnight low. Remember, 96% probability of taking out the overnight high or low. So if we refuse to get above 80.50 and they leave that overnight low alone and they start rotating down, then your 96% probability gives you a higher probability that it's going to go to the overnight low, because they left that overnight high alone, and we could get an 80% destination trade down there as well. So you got two probabilities to look at there. But right now, it's all about whether or not we hold 80.50 or we pop to 82, 82.75, 83 area, and what happens at these two levels this morning. All right, take a quick look at gold. Like I said, I took a nice gold trade this morning on the news. Oh, look at, we had I missed the run up. Look at, got a FUBAR Mr. Sneaky to the upside. And I missed it. Here, I was showing this. This is my favorite gold setup, gang. FUBAR, volume spike. The selling wick is not as big as I would like it, but it's still created, then with the volume spike, it still created the tech gap. Then you've got the Mr. Sneaky, the inside bar, and what are they doing now? They're rotating it back up to close that tech gap. If you see this in gold on the 15-minute, start trading it. It's a money maker. I mean, I was, looking at this one last night, but we didn't get the Mr. Sneaky. So I waited till the news this morning, and when we broke below that 9 EMA, I just pulled the trigger. Okay, so gold window. We were talking about that symmetrical triangle. We are still in it. So you can bring this in, bring today in so far. Oh. So value doesn't change. It's still here at 91.40. We're still holding, pretty much right at the value area low, and we're consolidating this. When we break out of this, and again, I've been waiting for either a break above 1102.50 or a break below 1074.70. Those are the two areas that you really want to, unless you get some other setup or a news-driven event like this morning. It's going to be hard to take. Let me do this. I want to let me see where the breakouts are. I still think it's down, personally. So there's your triangle. We've tested both sides of it now so far today. So we could get the breakout today. It's getting close to the apex here, but we'll have to wait and see. Anyway, that's what I'm looking at. As always, trade well, trade safe, and we will catch you on the flip side.